Hello, this is my GYIS stock pitch presentation by me, and what I'm pitching to you is Marathon Digital Holdings, and I am buying this company, and I have a price target of $35 by 6 months from today. So first, let me just dive into a description of the business. What is Marathon Digital? So Marathon Digital Holdings is a prominent publicly traded Bitcoin mining company. So the company basically validates transactions on the Bitcoin network, which is just the blockchain. And Marathon is a top name in the high-growth Bitcoin mining industry. Additionally, it boasts a fleet of top-tier ASIC miners, a type of Bitcoin miner, with the highest operating hash rates among publicly traded companies, meaning it can mine the most Bitcoin. Now let's just take a look at the industry overview and the competitive positioning of Marathon Digital Holdings. So first, an analysis of the industry. So the sector of Bitcoin mining is a rapidly evolving one. It just has continued to grow as time has gone on. And Bitcoin mining itself, the way it works is that it relies on a proof of work consensus algorithm where a miner tries to solve a cryptographic problem by using computational power, being the Bitcoin miner, the machine. And this industry has witnessed a tremendous boom with many bull runs, such as the one in 2017, 2021, and now even in 2025. So with this boom, though, weaker entities, weaker Bitcoin miners are driven out, and larger ones are favored, such as Marathon Digital, which makes Marathon Digital right now in an environment in which it can thrive. So let me just talk to you about Marathon Digital's competitive edge in its industry. So on the right, you have a table which just compares a variety of companies in the industry between Marathon Digital, and it compares their hash rates and with their market caps and what differentiates each one. So first, let's just go through the hash rate. So with a 53.2 exahash per second hash rate, Marathon is one of the largest publicly traded miners because it can obviously mine the most Bitcoin. If you look at the other ones, such as Riot Platforms, which can only mine 31.5, or CleanSpark, 35.52, Marathon is above everyone else. And it proves because it also has the highest valuation at 4.09 billion. But additionally, it also keeps most of its Bitcoin in reserve. So in order to raise capital, it keeps most of its Bitcoin. And on top of that, Marathon takes low-cost energy deals aggressively, locking in sustainable and stranded energy sources so that it doesn't have to put so much money towards that. Now moving on to Marathon Digital's potential to expand and grow in the future. So here are some key growth catalysts for Marathon Digital. So first, it's geographic diversification and energy strategy. So Marathon Digital has diversified where its miners are across the United States, implanting places in a variety of areas, and it has gone international by implanting a new miner pilot program in Abu Dhabi. Marathon has also gone and tried to reduce its energy costs by trying to switch to renewables and such as hydroelectric power. In addition, it also has strong financial strength and capital access, as I said, because they have strong cash reserves and hold lots and lots of Bitcoin. They also work towards lowering their costs per mined Bitcoin. And as time has gone on, institutional adoption has only gone up more and more, which is kind of paints a bright future for Marathon Digital, because the more that institutional investors become comfortable joining the crypto market space, the more that Marathon can grow. So now let's just do a quick financial analysis of Marathon Digital. So here I have 4 analysis tables analyzing profitability ratios, balance sheet, valuation multiples, and projected revenue and profitability over the next 12 months for Marathon. So first in the top left, we'll look at the profitability ratios. So this just compares Marathon across two other companies and the industry average, and it shows that they have a higher gross margin, higher earnings, and higher net profit, while having a lower cost for Bitcoin mine, meaning that clearly Marathon Digital has one of the lowest cost structures for how it operates, make it one of the best of the bunch in terms of the Bitcoin mining companies. Now moving on to the top right, you have the balance sheet, which is fairly strong. And one thing that stands out to me is that they hold 46,000 Bitcoins at an average price of 84,000. And they have a medium-ish debt to equity ratio of 20.2%, meaning that they can sustain a rainy day. Now on the bottom left, you have their valuation multiples. So consisting of the PE ratio, earning values over earning before interest, taxes, and so on, and their price to book ratio. So Marathon is currently trading at a discount in respect to the industry average, as you can see, because its PE ratio is 12.3x, while the industry average is 16.2x. So this indicates that it has further room to grow, making it one of the most attractive options for purchase. Now, lastly, in the bottom right, we have their projected revenue and profitability over the next 12 months. And this is just an estimate based off of their earnings per share. So if Bitcoin is to hit 100,000 as it already did, that generates revenue of 1.5 billion and a net income of 300 million. And then it just scales as you go on. 125,000 is 700 million in net income, and 150,000 is 1.2 billion in net income. So if Bitcoin does reach these ranges this year, as I predict they will, Marathon's earnings will increase significantly. And when you apply the PE multiple of 15x, Mara's fair value ranges from $30 to $40, as I said, where my price target of $35 lies within the next 6 months. So now moving on to a Marathon stock performance over time. So over time, you can see that from 2017 to 2024, Marathon Digital has gone up and it has gone down. So when it went up, Marathon's all-time high in 2021 coincided with Bitcoin's cycle peak of 69K. And you can see this common trend where Marathon's price correlates with that of Bitcoin. For example, again, in the 2022 crypto winter, basically when crypto had that big downside after the bull run, Marathon's price dipped to below $5 as Bitcoin also dipped down to 15K. And since that time, around early 2023, Marathon has steadily built its way back up, even hitting price ranges of $30. It is currently at a downturn right now, which makes it the perfect time to buy. So here's just a chart reflecting that. So you can likely ignore prior to 2017 because Marathon Digital Holdings wasn't actually a Bitcoin miner in that time period. You can see the general correlation to Bitcoin from 2021 and onwards. And a beta analysis proves this because you can see that Marathon consistently trades at 3 to 4x Bitcoin's price movement. So basically, if Bitcoin goes up 10%, Marathon goes up 30 to 40%. So it clearly has a proven historical track record of going with whatever Bitcoin does. So let's just look at a current stock evaluation of Marathon Digital. So some key support and resistance levels consist of support at $10 and $8.50 and resistance at 15, 18, and 30. So some moving averages and a trend analysis indicate that its 50-day is at 1541, its 200-day is at 1823, and its RSI is very low at 39.28, indicating that this is a bullish time to be buying as we are in an oversold position. Additionally, its high detraction from its moving average because its current price is 1184 implies that it is oversold at the moment, and that now more than ever is the time to buy. So now moving on to the macroeconomic side. So because Marathon is a risk-on asset, whenever interest rates are rising, that is negative, and whenever interest rates are falling, that is positive. And historical precedence proves this because in 2020, when we had like near zero interest rates during the pandemic, that fueled a historic bull run in Bitcoin and Marathon Digital Holdings. And in 2022, when the Fed started to raise interest rates to all the way up to around 5%, that triggered a sharp downturn in Bitcoin and mining stocks. But here we are in 2025, where the Fed is sort of signaling that potential rate cuts could be coming in the second half, which would be a bullish catalyst for Bitcoin and Marathon Digital Holdings. So now moving on to the ESG considerations. So Marathon's push for sustainable mining consists of transitioning to renewable energy sources, carbon neutral mining operations, and heat recycling and energy efficiency. Now, the reason for this is because Bitcoin mining is a process that requires lots and lots of computing power, and therefore high carbon emissions are emitted because of electricity usage. So second to last, moving on to the investment risks with Marathon Digital Holdings. So Marathon's main investment risk is the volatility of Bitcoin. So Marathon is so heavily attached to Bitcoin that essentially when Bitcoin goes up, it goes up as well. And when Bitcoin goes down, it goes down as well. Additionally, there is a lack of regulation in the crypto space, which could lead to unexpected problems with the Fed. And finally, Marathon's energy costs are quite high, so they come as a downside and hence one of the many investment risks that come with this. So finally, the impact of AI in Bitcoin mining. So Bitcoin mining can become more efficient with AI and power consumption can be reduced. AI tech can also scan enormous amounts of data from mining equipment, which quickens things like maintenance. So for Marathon, AI tech can significantly reduce costs in many places, overall being a boon to its business model. So that was my presentation. I hope you enjoyed it, and I hope that you will join me in purchasing Marathon to my predicted price target of $35 in 6 months.